welcome. You're watching Business Today Television. I'm Sakshi Batra, and this is What Sort, a show that focuses on the biggest buzz on the D Street. Today on the show, we're going to be focusing on the stock market trends, the global cues, and of course, all the stock-specific action that we are seeing post the earnings as well. As a lot of news flow is also, being seen in a lot of stocks today. So we are going to be focusing on that as well. Remember, we will also be focusing on the falling crude oil prices and what does that mean going forward from here. That's another space that we are going to be focusing on, and we have a special guest who's going to be joining in. Gaurav Sharma, Associate Vice President, Head of Research at Globe Capital, is now with us. But before I come to you, Gaurav, on that, there's a breaking news that we are going to be starting off this show with, viewers. This is with regards to IMD coming out with its next forecast of the monsoons 2026. IMD has said that they see below normal monsoon in 2026. India monsoon rainfall they see at 90% LPA. Earlier, IMD had pegged the monsoons at 92% LPA. There's a further dip of about 2% here. LPA is the long period average, and the June rainfall again they expect to be below normal. Again, IMD has cut the 2026 monsoon forecast, and therefore they also expect central India may see weak rains this time around. That's a very, very important update that we are getting, viewers, with respect to the India's Met Department that forecasts what it could bring in when it comes to southwest monsoons. These southwest monsoons are critical not just for agriculture but for the entire economy as a whole, viewers, because about 60 to 70% of the rainfall in India is seen during this period, and it has a direct impact on the kharif crops, and therefore in case there is weakness in the monsoons there could be an impact on the crops output and therefore further lead to impact on inflation as well for you and me. That's something that you have to keep in mind. Let's quickly go across to our guest. We have Gaurav Sharma joining in on the program to share with us what exactly he makes of this new statement that's coming in from the IMD. Gaurav, good morning to you. Before we start off with the markets, this is an essential, a very important update that's coming in. We're inching closer to 1st of June. Every year, economists, agriculturalists, and even, consumers look at this data point to find out whether the monsoons will be normal this time. Remember, the entire North India is facing a lot of heat wave, and some kind of a respite was absolutely needed at this point in time. But these fresh updates indicate there could be further weakness than earlier expected from IMD's own estimates in the upcoming monsoons.
Sakshi, very good morning to you. Uh, Monsoon is a concern among other concerns that are impacting equities and other factors negatively impacting the Indian economy. Now, there is an added factor as well that has to be taken into account, which will eventually lead to uh, the crop being disturbed and higher prices of the crops that will be cultivated in the due course. And if that is so, again, inflation will go up, which is eventually going up any other way. Therefore, I think this further strengthens our belief that we are having stressed time ahead. There will be a possibility going forward of a interest rate hike because inflation is nowhere stopping. Continuously, we are seeing the gas prices being hiked for the fourth time. I am expecting a further hike in petrol diesel prices as well. The WPI figures are already at 3 years highest points. A further peak in those levels is pretty much likely, and I firmly believe it is inevitable now. Therefore, this will have a negative impact on domestic equities. What is most warranted is a steep slide in the crude oil prices and a clear-cut announcement of the US, Israel, and Iran conflict settling down. Smooth passage for crude and gas. So I think that is most warranted, and this will actually nimble some of the negative impacts.
Gaurav, on the crude oil prices also, we have an update today. One, of course, the crude oil prices have ebbed lower and are below $95 a barrel as well. That is seeming to be a big positive for Indian economy as well. But the US energy giant ExxonMobil has warned about how global oil inventories are set to fall to record low levels, and that could happen just within weeks from now. Now, potentially triggering a sharp spike again in the crude oil prices. Right now, viewers, you're seeing on your screen 1% lower, impact on the Brent crude prices. It slipped below $93 a barrel as well. This was auguring well after weeks of seeing crude oil prices above 100 $105 a barrel. This was a welcome move, and Brent crude prices were actually lowering because of the US Iran truce getting reported and ceasefire getting reported as well, and therefore there was some cool off. But in case the inventory levels fall to record low levels, prices could surge once again when these inventory levels hit critically low levels as well, and that could eventually curb the demand and, of course, help rebalance the market. What is your own understanding of these various moving parts which are determining the crude oil prices right now, Gaurav?
Sakshi, this is I think the very much obvious when the supply chain logistics part is disturbed, countries will be forced to utilize their inventories. That's what exactly is happening. Therefore, that will have an impact. They will refill, and they will be encouraged to refill it faster because there are uncertainties, and that will further lead to increase in crude oil prices. So I think these are cascading impacts of the ongoing rift and the supply chain disturbances. So this is something which is very much unavoidable and pretty much expected as well.
Absolutely. So, within the current scenario that we are looking at, what is your own expectation of the markets? There was a dire expectation that we could slip below 20, below the critical levels of, what we are seeing right now onto the Nifty, even, leaving around 23,800 at risk. But because there was some truce news that came in, that elevated the levels today. Because as of yesterday it was the market's holiday, but the gift nifty trends were indicating to a sharp 3 400 point downtake. It got recovered, thankfully. We are at 23,950 right now, 0.18% higher, so we pulled off from those low levels as well. But what is your own understanding of where are the markets headed?
See, when we look at a trading standpoint, yes, specifically levels do have their weightage, and one has to go about it. So from now, 23,800 is a very important support. If that is taken out, market will drift towards 23,400, 23,200 odd levels. But from a broader perspective, 23,200 is a very, very, very important point to look at. Uh, I am not very much optimistic on the markets. 80 to 90 dollar a barrel is the new normal for crude oil prices. We all have to bear it. I think we should have to bring this out of our minds that the crude prices will get down or come to the previous normal levels anytime soon. I'm talking about within India also. The government is nowhere in a position to reduce the prices, neither they are in a position to hold on the price increase, because if they do so, the current account deficit figures will mount. That will eventually impact the market. If they go on increasing the prices, the inflation figures they won't be able to keep under check, and eventually have the broader economy will take a hit, which is already going on. So things are not at all good. Caution is what I am clearly advising. This is not the time to be all in. This is the time to have some cash portion as well.
Okay, very important statements coming in from Gaurav viewers that you need to have some caution in place. Don't go all in. Have some cash position also in this current market. Things are not looking hunky dory right now. Things could change from the current situation and worsen very quickly. If the situation turns worse, then there could be multiple impacts in the economy that we could see, and that could result in the stock market's underperformance as well. So be cautious is clearly what Gaurav is talking about. But let's talk about some of the sectors and some of the stocks that are in focus also today. IT stocks are clearly outperforming in the session today. We are yet again seeing that the IT index has taken it upon itself to buck the trend, 2.78% higher today. And we are looking at all of these stocks from large caps to mid caps that are in focus. Especially, we'll start off with Wipro, where we saw a smart move in the morning session. Also, it's continuing with 2.3% move today. Remember, it was Wipro's ADR that surged 20% on Wall Street. It also marked its biggest single day jump since 2008, and Indian listed stock also gained about 5% in the initial trade. And this rally was triggered by ServiceNow partnership. And right now, ADR shares are up in 8 of the last 10 sessions already. This bet, on agentic AI is helping the stock to also move up. The expansion of AI partnership with ServiceNow is in focus. That could focus on enterprise workflow automation, targeting telecom, procurement, cybersecurity, and the aim is for faster execution, lower manual work, and AI-led governance and audit systems integrated as well. So that's what really pulled up the Wipro stock higher. And of course, we've seen the entire space come into focus as well. Gaurav, your sense on the IT stocks and what should one do with Wipro after a long haul? A big positive news has come in for Wipro.
You have rightly said, Wipro has been underperforming its peers from quite some time. It's over 2 years the stock has been underperforming now. Some good things, some good news coming in on the technical side. Also, there is a double bottom formation visible here. Some good news as well. I'll still wait for a breakup of 212 to take a position as the stock has been a grave underperformer. So the reversal need to be really strong. Some bit of a buying interest on the volume front is also visible. As far as my take is concerned on the broader IT segment, I'm bullish on those companies that come up and drive their volume revenue from the BFSI segment. OFSS is one of the outperforming player. It generates about almost all of it, 90% of its revenue and income from the BFSI space. Coforge and Emphasis are the two Indian listed companies which also drive over 50% from the BSFS FSI space globally and domestically as well. Therefore, this is some areas that one should be concentrating at, especially from a medium to long term perspective. Trading must be avoided.
Okay. Let's also focus on the MSCI rebalance. That's, of course, bringing a lot of stocks into focus. We have this shake-up happening wherein a Federal Bank, MCX, Nalco, Indian Bank have been added now, and Hyundai Motor India, RVNL, are among the exclusions. The MSCI changes are effective starting May 29th, and the sharp passive inflow action is expected on those stocks that have been finally added. But all those index related stocks, there could be some volatility as well, viewers. So remember that. We also have this big winners and losers would include Adani Power, BPCL, Nika. They're getting higher weightage now. And Trent and Oracle Financial Services have also seen some weightage increase. But TCS, Infosys, HUL, they have faced weightage cuts. We've seen Bajaj Finance, HAL, and ONGC that could actually see some outflows. And pharma, PSUs, and large caps are something that we will also focus on. But your own sense on the MSCI rebalancing, how much of the impact do you see there? Especially, we used to see MSCI rebalancing impact that happens twice in a year to largely get impacted with the FII inflows. This time it's a tricky situation. The FIIs have been constantly pulling out from the Indian markets. So, will these additions truly get the kind of inflows that we are expecting? Because initially it used to be the FIIs that used to contribute to a large part of inflow because of this rebalancing.
What I very well remember from the past experiences of MSCI rebalancing is just one word: huge volatility. This time around, when you have rightly pointed out, FIIs are missing. They will be missing. There are very bleak areas, very few stocks and sectors where we have seen FIIs increasing their flow of late. Majorly, they have been reducing and offloading their positions, and their DIIs have been continuous buyers. Nothing negative as such in that, but yes, it'll be very good if FIIs comes back to business, but that it doesn't seem a picture coming back to action anytime soon. Not a surprise to see RVNL from the railway pack, an underperforming segment, a reduction. Not at all surprised to see Hyundai as a part, because this particular company has come down from second position to fourth position now as far as sales are concerned. So they're not at all surprised to see stocks like Trent and Oracle. Oracle has done really well. We have already discussed about it. Trent is at very good levels. It is on my radar as well. Came up with very good set of numbers in the March 26 quarter. Uh, a possible candidate of a reversal. Yet little early to say, but yes, this stock should be on radar.
Okay, got that. Let's also focus on one more stock that is in my radar today, and that is MCX. And we are actually seeing some downgrades on the stock today. UBS has come out with its report on MCX. It has downgraded the stock to neutral rating. The target price has, however, been raised to 3600 from 3200 early, but they actually believe that the peak earnings momentum may be over. Commodity trading volumes are normalizing after Q4 surge, and stock trading is at nearly 50 times forward earnings. So that's something that is on their watch list, and the strong volume growth is already priced in, is what they are already marking in. The stock is down by 4% after this report today. Your own sense on MCX?
Won't be commenting on the broker's report here. My
Sure.
own sense is I'm very much bullish on both the exchange listed entities, MCX and BSE. The kind of momentum and the kind of traction that we have seen of late from gold, silver, crude oil, uh, aluminium, base metals. I'm talking about all the base metals. I think this is actually culminated into the quarterly numbers. And I would say that numbers speak louder than any other thing. And if they continue on the path that they are continuing, I really find this as an opportunity to enter. Any price close to 2800 is a good place to actually get along MCX for especially those who have missed the bus previously.
Okay, got that. So I hope that viewers, you've got some clarity there on the commodity exchange. We'll also focus on commodity plays like Coal India from the power plays in focus. Why? Because of its offer for sale, and for retail investors as well. This is opening up, and that's something that we will be focusing on today. The stock is up by about 1.2% odd, and we'll try and understand what exactly this offer for sale offers for all the retail investors at large. It's already drawn strong institutional demand, bids worth 19,000 crore rupees as well. And the big question is, should you as an investor participate in this OFS or not? The government aims to sell 6.16 crore equity shares representing 1% of Coal India's total paid up capital as the base offer size. And of course, the government retains an oversubscription option to sell additional 6 crore shares, taking the offer size to 12.32 crore shares or 2% of the equity at the floor price of 412 rupees. This would be worth more than 5,000 crores. Let's try and understand, what exactly retail investors have to keep in mind here. Gaurav.
Sakshi, I'm afraid I won't be able to comment on Coal India.
Okay?
Our firm does participate in some of the OFS and other corporate actions. I would, due to compliance issues,
Sure.
I'll refrain.
Okay, fair point. But anyways, viewers, we'll give you an understanding of what you should remember here. Remember, the floor price implies a 10 to 11% discount from the current levels, but the stock has soon erased all the losses, and it also has moved up to 468 rupees per share as well. And what we are given to understand is that already on the first day we saw 19,000 crores by institutional investors, and now we are actually seeing the non-retail or the institutional subscribed about 45 crore shares. That's over 8 times much higher than what was expected there. At this indicative price, the bids of over 45 crore shares amount to 19,000 crores. That's how we have come to the number. Out of the total size, 10% or about 1.23 crore shares have been reserved for these retail investors starting today. And additionally, about 25,000 crores have been reserved for eligible employees of Coal India under the employee reservation category as well. So, employee eligibles category employees can actually bid for shares worth up to 5 lakh rupees, is what we are given to understand at this point in time. So those are some of the details that you should definitely know in case you are interested in finding out what you should be doing on Coal India OFS. Well, you should definitely consider speaking with your financial expert on the same too. Let's move forward and focus on some of the other key aspects as well on the markets. We're also looking at the real estate stocks also move up today. Large part of the sectors are although down, but let's try and understand what's happening in some of the momentum sectors. Real estate, have you been looking at lately, Gaurav? What are the triggers that you're penciling in here? Is this a space to be in FY27?
Real estate has always been a very volatile space to be in. Not at all for those who want subtle and consistent returns, but certainly for those who want quick action in their portfolios. Lodha, DLF, and Sobha developers are some of our preferred stocks from this space.
Okay, got that. So that's the real estate space that you should focus on. Some more earnings that we can focus on from the new age tech space. PhysicsWallah is in focus. Wednesday evening is when it came out with the results, and today the stock is getting a reaction on the stock markets. Today the stock is up by 3.5% at 115. The company's losses have narrowed to 74.8 crores in the March quarter. Remember, the company had reported a 293 odd crore rupees of a loss in the year ago period. And what we do know is that in the preceding quarter, the company had posted a profit of 100 crore rupees as well. So, but again, we have seen some losses getting reported this quarter. The revenue from operations have jumped, however, 50% to 918 crores. Sequentially, the revenue has also fallen by 15%. Your understanding, Gaurav, of PhysicsWallah?
Yes, the revenue front, the company has witnessed a very good smart uptick from on an year-on-year basis. Similarly, the loss has also reduced quite considerably on an year-on-year front.
Mm-hmm.
This gives us hopes that in the next year or the next quarters to come, the company would be in a position to post profits. As far as short-term trading is concerned, one should consider taking a position closer to 122 odd levels. That is a breakout point. Good, handsome consolidation in a narrow range close to 105 to 115 has already been witnessed. A break above 120, 122 levels will quickly take it towards 140, 145 zone. And that is where one should be eyeing at.
Okay. Let's also focus on some of the other stocks. We have one of the popularly tracked stocks from auto space that's in focus today, Ashok Leyland. A lot of retail investors keep asking questions on this. So this is a heavily tracked retail stock. The company has reported 11% surge in its consolidated net profit at 1,381 crores this time in the March quarter. Of course, strong revenue growth also we have seen for the company being seen. In fact, the company has also posted its consolidated profit surge in the corresponding period of the previous fiscal also. And what we are given to understand, the revenue has come in at 17,246 crores. Again, this is a jump from 14,695 crores in the year ago period as well. But the company has also talked about how the board has provided in principle approval for raising 300 crores through issuance of non-convertible debentures on a private placement basis as well. That's something that the company is in focus for. But the stock has declined by almost 2.4% today after the earnings. Ashok Leyland again is one of the stocks that has been very volatile, Gaurav, since we are talking about a lot of volatile segments. Your suggestion here, but there's a lot of retail interest post the earnings. What is it that continues to be on the watch list here?
There are certainly few points to talk about.
Mm-hmm.
Their monthly sales figures are good. Their
Yeah.
quarterly performance is good. Annual basis, also the company has reported very good set of numbers. And another highlight is, as I've talked about in the opening commentary, there are very few nook and corners where we have seen
Yeah.
FII interest. This is one of those. So Ashok Leyland has been able to attract FIIs. So fresh and some addition was seen in this particular quarter. Therefore, considering the kind of numbers the stock has, the company is posting, I think this is the time to just be in, hold on to your position, and utilize dips to add up more. Any decline towards 140 is a very good opportunity to add it to your portfolio.
Okay, got that. Let's also talk about the pharma space, which of late has caught the attention of a lot of people. From last couple of months, we've seen considerable improvement in the pharma sector. A lot of stocks have outperformed, and most of the technical analysts are also talking about how pharma as an ETF should be looked at consistent levels. There are a lot of improvements that we are seeing. We'll also talk about one stock here, and that is Wockhardt, which has substantially moved higher today by about 6 odd percent. This is after the company has received the Central Drug Standard Control Organization approval for marketing its newly developed antibiotic Zenic in India. And the drug has been approved for treating complicated UTIs, including kidney infections, and for adult patients. The stock is now up 8.3% higher at 1918 odd levels. We'll talk about Wockhardt, sorry, and we'll also talk about the entire pharma space as a whole, Gaurav, as to what are the key triggers here we are watching out for those who do not have adequate exposure in their portfolios to the pharma space. What should they do right now?
Let's talk about the overall pharma space first. Uh, the Indian pharma segment, the sector has reported a 6% up move on a monthly basis, over 11% on a quarterly basis, clearly outpacing the momentum of the overall markets. The Indian rupee depreciation against the USD is actually a blessings on disguise for the pharma space, which indulge into export business. A larger chunk, and I mean, almost all of the Indian pharma companies are driving some or the other way from the US. This becomes a very fine opportunity for these players. Many of the Indian companies are leading players of API suppliers to the US pharma companies. Therefore, they are also on a sweeter spot. Now, when we specifically talk about Wockhardt Pharma, very good set of numbers from the company, subtle performance. Yes, it is a volatile stock, but as far as their performance is concerned, the performance is pretty much consistent. So if someone is having there in a portfolio, they must hold on to it. The company is doing all the good here. On an year-on-year basis, the company has reported reasonable set of numbers. Uh, Against the loss that the company has been reporting from the past consistently from past 2 3 years, the company managed to post a profit of close to 200 crores this year, reasonably 10% uptake on the revenue front as well. Things moving on well for Wockhardt Pharma. Hold would be the suggestion.
Okay, all right. Gaurav, we'll leave you at that note. Thank you so much for being with us on the show. And we've touched base upon so many sectors, so many stocks that are in news, and of course, where the opportunities also lie. Appreciate your time with us as always, Gaurav.
Thank you. Always a pleasure, Shanti.
Thank you. All right, viewers, we'll wrap it up on that note as far as what sort is concerned. This was the show that focused on everything that's buzzing, all the stocks, all the sectors which you need to keep an eye out on and what's truly happening in the markets today. But up next, we'll take a short break and we'll be back with a special focus on EPFO. Employees Provident Fund. And of course, in case you are an EPF contributor, what you should be knowing about what are the new changes that are coming in, what to expect in EPFO 3.0, how is it going to make your life simpler when it comes to your own money in EPF, and how can you start giving it more attention now to make the most of your EPF investments for your long term retirement benefits. Stay tuned. Up next, we're going to be decoding everything you need to know about EPF.